Surendra Bhatia, the Deputy Managing Director of Athi River Cement. Pleasure to have you speaking to us today on the occasion of your AGM. Mr. Bhatia, what were your impressions today? What did you hear? Was there anything that caught your attention?
I think most of the shareholders were fairly satisfied with the performance of the company. And I think a lot of them echoed their confidence, not only in the company's performance, but also in the company's management. In terms of the financials, we found that there were far many more questions this time, and we had a very educated shareholder base which was asking us questions. A lot of them were very relevant. We really appreciate that most of our shareholders did go through our annual report and the results in great detail, which gives us, the management, a lot of confidence.
Yes.
We have shareholders who really take interest in the company.
Does it surprise you, the degree of interest? Because there were some quite technical questions coming in there.
It did surprise me, but at the same time it was a source of pride that we have a shareholder base who is so educated.
Mr. Bhatia, you also released your first half results at the same time today, and I saw that there was quite a above trend acceleration in turnover. That was very healthy, 20% acceleration in profit before tax, I think 21 or around that area. Those seemed strong results. And how would you characterize them as strong, or how would you characterize them?
I think most of those results were as per our budget, as per our expectations. We had expected Kenya to be much better than the first 6 months as compared to last year.
Because of the softness of that previous 6 months?
Because of the softness in that period, and true to our expectations, the market behaved exactly the same way. In Kenya, we have seen the infrastructure demand from the infrastructure segment being strongly driven. That's another positive for us, and we were able to tap into those opportunities. In Tanzania, obviously it was increased capacity utilization, despite the fact that in Tanzania the second quarter was slightly soft because of heavy rainfall in most of the coastal regions. We are happy to say that there was a significant increase in the turnover in Tanzania. So overall, the performance is as per budget.
Yes.
We had expected it, and growth by 20% and EPS at 3.4 is exactly in line with our budget.
And that's before what is expected to be margin expansion once the Tanga clinker facility comes on board, isn't it? You didn't have any of that Tanga clinker facility on board in this first half results, did you?
Absolutely. I mean, we were expecting that our Tanga plant would be commissioned at the end of the second quarter or early third quarter, and therefore in our budget also we had not budgeted for any improved margins coming in from Tanzania. Going forward, yes, in the second half of the budget we expect a significant improvement in our margins. Producing clinker is twice as more profitable as importing clinker. We should be in production in Tanga very soon. The commissioning of the plant has actually started, and the second half of the results, as we have mentioned in our release today, we expect it to be far stronger than the first half of 2014.
And now looking, I mean, you know, we've had this big expansion that you've undertaken, and obviously, you know, that you've taken on quite a bit of debt to do that. Are we now going to be running at this sort of expansion trajectory, or are you going to take a pause for breath, or how do you look at the business right now? I know you've picked up speed, you're carrying a bigger sort of debt load. Are you going to carry on running at the same speed, or do you see yourself sort of taking a step back?
I think if you analyze the performance of the company over the last 15 years, you will see that we have always had these big steps which the company has taken. And then we have consolidated the operations of the company so that we don't accelerate too fast. And once we have got our debt position under control, we again expand. So the expansion opportunities are many. We have already announced we are going into Kitui, and we do expect to take that forward. But yes, as a company, we will have two focuses as we go forward. Commissioning of Tanga is going to increase our EBITDA significantly. We will probably double our EBITDA next year as compared to this year. So expansion of EBITDA would go to two. One is reducing the debt so that we are able to consolidate the operations. And the second part of the EBITDA would go to expansion, which is increasing our capacity in Kenya and in the region.
And looking at some other components of the business, cement now is what percentage of the business?
Cement is today 85% of the company's turnover. The balance 15% is all the other businesses which the company have. Though 15% may seem to be a very small figure, but these are very critical businesses to the company. The company has grown in the cement business on the back of the cash flows of the non-cement business.
Is that right?
And the non-cement business also provides us a valuable foreign exchange cover, which we are able to hedge and borrow in dollars, keep our borrowing costs down. So given the overall position of the company and the value the non-cement cement business brings to the company, though it is small, it is still very important and very valuable for the company.
Mr. Bhatia, today I think we're celebrating this year 40 years of Athi River. Where do you see the next 5, the next 10, the next 20 years? Are you going to be an Africa-wide player? I mean, I know you've taken a majority stake in Rwanda. I know there's a business in South Africa. Where do you see this business going?
Well, I think the vision of the management and the vision of the CEO is to make ARM, which is essentially a Kenyan company, make it an African multinational. We want to grow in Africa. We believe it's the African companies who have to take the lead in developing Africa. We want ARM to be one of such companies which would bring about the growth and be the driver, a catalyst for economic development in the region. So yes, we see ARM as a regional player, definitely in the next 5 years. We see it as an Africa-wide company in the next 10 years. Our focus at the present moment is East and Southern Africa, but then going forward, yes, we would like to contribute to the development of the entire continent.
Let me touch on one final question. You know, clearly other people are being attracted to our markets now, to the cement market in particular. Everyone keeps bringing up Mr. Dangote. How do you view the competitor landscape? Is it changing? Do you see it as a threat?
That competition will come, whether it is Dangote or any other company, is something which we can take for guaranteed in our business. I mean, competition is going to increase. And therefore, we as a company have taken a decision that we will be ready to face the competition. We will be, in terms of efficiency, be the best, and we'll make the others try to compete with us rather than us competing with them. Given the fact that we want to be a clinker manufacturer, that gives us a significant competitive advantage over everybody else. The second advantage which we have is that we are, in terms of our business policy, we have said we want to match international cost and quality benchmarks. We want to be the most competitive manufacturer of clinker and cement in the region. We want to build on our strengths rather than be concerned about the strengths of our competitors. And the entire strategy of the company has been based on the strengths which we have, our ability to put up clinker plants, our ability to put up clinker plants at a significantly lower cost than the others, our ability to penetrate into the markets, establish distribution networks, create value for our customers. And these are the strengths on which we want to build as we go forward.
Thank you very much, Mr. Bhatia.
Thank you.
Thank you.
Thank you.
Thanks.